Hello, this is Japanese Economic Review Channel. Welcome to the Japan Macro Trade Briefing for February 2026. Today, we dive into the preliminary trade statistics. While we see a trade surplus, it is a razor-thin margin masking deep structural shifts. We will explore how factors like the slight depreciation of the yen, averaging 155 Japanese yen and 65 sen per USD, and shifting global demands are actively reshaping Japan's trade landscape. Looking at the top-line figures, Japan recorded a trade surplus of 57.3 billion yen, which is an 89.8% drop year-over-year. Exports grew by 4.2% to 9.57 trillion yen. Yet imports surged by 10.2% to 9.51 trillion yen, heavily compressing the surplus. Notably, on a seasonally adjusted month-over-month basis, we actually face a massive adjusted deficit of 374.2 billion yen. This chart visualizes the fragile landing pad of our trade balance. The robust gross exports were nearly entirely eclipsed by the massive imports. The surplus cushion has evaporated by almost 90% compared to last year. This highlights Japan's acute vulnerability. Even a minor shock in global energy prices or currency volatility could easily tip the balance into a deep deficit. The key driver on both sides of the ledger is the semiconductor sector. Semiconductors and electronic parts fueled export growth, jumping 25.1% YoY, and also drove imports up by 35.0%. This highlights Japan's highly intertwined role in global tech manufacturing. Conversely, exports of semiconductor manufacturing equipment dropped by 16.9%, acting as a drag. Japan's trade dynamics are deeply bifurcated across regions. Exports to the US fell 8.0%, while EU exports grew 14.0%. Asia saw a steady 2.8% export growth, returning to a surplus. Meanwhile, exports to China dropped 10.9%, alongside a 35.4% surge in imports, exploding the deficit. This shows how traditional markets are contracting, while regional tech ties strengthen. Focusing on the US, the trade surplus contracted by 25.6%. This is primarily driven by a significant automotive headwind. Traditional vehicle exports slumped by 14.8%, creating a massive drag on overall U.S. exports. Simultaneously, import costs exploded, particularly for crude oil, which surged an astonishing 1,386.3% YoY. The U.S. market is showing clear signs of strain. In contrast to the U.S., exports to the EU saw a strong boom in autos, rising 26.3% YoY. However, despite this overall export growth, the trade balance remains trapped in a persistent 25-month red streak. The primary culprit is a massive aircraft procurement bill, with imports surging 928.9%. Structural procurement needs are completely offsetting robust export gains. Asia stands out as a steady supply chain engine, returning to a trade surplus of 256 billion yen. This relationship is defined by intense intra-regional tech manufacturing. Semiconductors and electronic parts anchor both sides, with exports up 27.2% and imports up 44.1%. This mutual reliance confirms Asia's role as a deeply integrated hub for Japanese tech components. The situation with China represents a deficit explosion. The trade deficit ballooned by 414.5% to 967.3 billion yen, marking the 59th consecutive month in the red. This massive widening is driven by a 3.1% collapse in semiconductor manufacturing equipment exports, paired with swelling imports of clothing and telecom equipment. This points to a significant structural shift. Zooming out to the 12-month macro trend, we see that February's tiny surplus is a precarious outlier in a year largely defined by import-driven deficits. Just last month, in January 2026, Japan recorded a massive deficit of over 1.16 trillion yen. This volatility emphasizes macro instability, heavily dictated by external procurement costs rather than a steady return to surplus. In synthesis, Japan's razor-thin surplus is an artifact of three competing forces: deep tech integration within Asia, a severe drag in traditional exports like the U.S. auto market, and a massive premium on energy and raw materials. The bottom line: the era of broad-based export dominance is fractured. Japan is now subsidizing traditional manufacturing slumps with advanced semiconductor integration. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.